Hey everyone, welcome back to CPI week this week. So we're going to start with some theory and practice before we get to our CPI on Wednesday. Welcome back to another trading week. This is the third week of September. Just a quick sound check before we continue. Hope everyone is well, everyone's excited. There's a lot to talk about this week, really. Okay, audio seems to be good on my side. Let me know if there's any issues. My name is Video Angelo. Let's get this started with a news trading session, part 2. This is going to be your theory and practice, and basically just want to go through a few rules, a few strategies that we can use when trading news, and we'll try some example today just to put into practice. But yeah, let's get this started. With a quick disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risk and delays in order execution. So just keep that in mind when trading news releases. Be attentive when determining the volume of your transactions and consider all possible risk factors. So make sure you are going in with the right lot with the right amount of equity. All right, bonuses for participants. You get your promo code to double your deposit bonus as per usual, and then you have access to your private Telegram channel. And if you register through email to this webinar, you should be receiving that link to the Telegram channel. Okay, so what are we going to talk about today? We're going to talk about advantages and disadvantages of news trading, most profitable news for trading, what moves the market a lot significantly. We just did that 2 weeks ago during the NFP release. And we'll talk about news trading and price action, general rules for news trading, and we'll talk about the buy stop and sell stop strategy, as well as the buy limit and sell limit strategy, just to get things right, because we don't have enough time during NFP release and CPI release to actually talk about this order types, and especially if you're not used to this order types, these are pending orders. You might get things mixed up, and that's why we are going to be doing this session in between the NFP and the CPI, just to make sure you understand what you guys are doing and placing the right order types. All right. Okay, this is the code that you can use. It's non-farm 2023. Ignore the other languages. It's in Bahasa Indonesia. I'll try to get this fixed as soon as I can. The code is non-farm 2023. This is to double your deposit bonus. So if you want to deposit into your trading account, you can use this code to double your deposit bonus. It's there, might as well use it, no harm done. All right. Okay, let's talk about advantages of news trading first. Okay. All the necessary information can be found in the economic calendar, so there's no need to delve deeply into the technical and fundamental analysis if you want to be some traders actually do focus on just news releases. That's the only time they trade. So I think it's a viable strategy, and it's probably something that's actionable with limited knowledge of fundamental and technical. Obviously, if you have that knowledge with technical analysis or fundamental analysis, it does help as well significantly. But if you don't, and you just want to jump straight into trading, you can focus on news releases. You can look at how the market reacts during news releases. But yeah, it's tradable. And basically all the information, you can find it in the economic calendar. You can go to OctaFX.com's website, go under the economic calendar. You can actually see what's going on there, or you can use other sources as well, maybe Forex Factory. I use Trading Economics, right? I like that. It's just a simpler layout with, a much more correct consensus numbers compared to Forex Factory, but that's just my opinion because I'm comparing it with a lot of stuff. Okay, events in calendars are ranked in order of importance. It does help you to make adequate decisions, right? I can show it to you in a minute, but basically we have low impact news, high impact news, medium impact news. It's actually ranked, and you can use that to your advantage, because when it comes to news trading, you really want to have a news that's traded by a lot of traders, making it a high impact news. It creates a lot more volatility. It creates a lot more trading opportunities compared to something that's a low impact or medium impact news, where not a lot of people actually look at those news, or maybe not even trade them, or maybe the data is not as important, depending on the context, of course. Okay, publication of statistical reports noticeably increases the volatility, and traders can earn large sums of it. This is the advantage. We'll talk more about the disadvantage later on as well. But yeah, it does create a lot of volatility, and traders do take advantage of that. Depending on what kind of traders you are, when it comes to news trading, I think it's only divided into two camps, right? People that actually trade the news, whether or not they are short-term traders, long-term traders, doesn't matter. If they want to trade the news, then they are going to be those that trade the news. And then there are people that, consider news as more of a noise in the market, and they basically step aside and basically not trade during news releases. Now, obviously, it comes down to preference and experience as well. But yeah, I think as you grow as a trader, you'll start to filter out what news you want to sit out, what news you want to trade. But yeah, the choice is there, and some people trade it, some people don't. And the other advantages is the simplicity of a strategy. And this is probably true. I have to say it's true. You don't have to learn complex mathematical formulas. You don't need to learn complex technical analysis, to draw the most complicated shapes on a chart. You just need to be able to make a trade and close it. It's as simple as that. And in part, it's true. It's very simple. Even for experienced traders, on how we actually trade the NFP numbers, those that want to trade the NFP numbers, like how we usually do it every month, we basically just boil it down to a simple strategy, and that's basically using the stop orders. Okay. Minimal time expenditure on trading. You basically know exactly when to go to the trading platform and what to do. And best of all, the trading process itself can take only a few minutes. If you haven't seen how we trade the news, you can go back to the previous webinars. You can go to the OctaFX YouTube channel and maybe search inflation, search NFP, and there are sessions that I've done in the past few months to trade just the NFP and the CPI numbers. The trade orders, the way we look at the market is basically just 5 minutes before the news gets released, and we place our orders. And once the news gets released, typically within the first 15 minutes, we actually close out of our position, and that's really quick, right? We got news releases. We know what time it's going to get released. Just be on standby 15 minutes before. Set up your trades. News gets released, and you make the decision if you want to stay in that trade or you want to just close it out. It's as simple as that, and it is, I would say, minimal time expenditure, because we don't have to spend a lot of time doing the research. We don't have to spend a lot of time digesting all the fundamentals, so we don't have to spend a lot of time looking at some of the technical aspects of trading. Okay. So those are the advantages, and I kind of agree with all of them. Maybe point 3, we need to discuss point 3 a little bit more in detail, because that would fall under the disadvantages. Okay, now the disadvantages, not all the time market situation develops the way logical thinking and common sense predicts, right? What does that mean? Sometimes if we take a look at the numbers, and we know the number doesn't look great, but market reaction might be the opposite. Okay, because news releases, to a certain degree, it's still linked to the fundamental analysis, and there's still the need to have that fundamental context or the economic context on what we are looking at. What does that news represent? So we need to still understand a little bit about what we're trading. How does that impact the sentiment in the market? Okay, how does all the other traders look at that news? Okay. Now, not all news can cause any reaction at all. I filtered it out just now. There is news that are low impact, medium impact, and high impact news. Typically, the high impact news have that reaction in the market. Not all medium impact news have that reaction. And sometimes, depending on the context itself, high impact news might not even have that reaction as well. So we still need to kind of rank every month what we need to look for. Typically, employment numbers have a huge impact in the market. The inflation numbers have a huge impact in the market. Manufacturing PMIs, that typically have a higher impact than the services PMI, but really depend. Like last week, we don't have manufacturing PMI coming up from the US. We've got a services PMI, and we don't have a lot of news last week, so a lot of traders were like looking, okay, what's the most important high impact news releases this week, and they just focus on that. And last week it just happened to be the ISM services PMI, and the release was way above consensus, so it created a much bigger impact than what it normally would do. Okay, so you just need to keep in mind, not all news causes any reaction at all. Now, talking about potential gains in the market during news releases, we also need to take a look into the potential losses as well. If you don't get the direction or even analyze the situation correctly, you could experience a significant loss as well, because it's news, right? News gets released and market tends to whipsaw sometime. If you get it right, then yeah, it's good for you, but typically it doesn't last that long. It kind of reverses on itself as well. So you kind of need to know when to get in and when to get out, and that's basically why we're doing the NFP sessions and the CPI sessions. So you guys get that experience. I can share that with you. I've done more than 200 NFPs and CPIs in my whole trading careers, so I would know how to react when a certain things happen. How do we actually read out the NFP numbers? The past 2 months has been interesting. If you want to review the September NFP and the August NFP numbers, when we do that trade, I actually go step by step on how we read out the numbers, what should it be, and stuff like that. And obviously, every month is going to be different. Every month is going to be unique, right? It's not going to be a replica of every month the NFP number. If it's good, that's it. It goes in one direction. It doesn't work that way, because we're processing a few fundamental data as well, right? So maybe just give you guys a glimpse of what we're looking for in this week's number, the CPI number, which is on Wednesday. We are actually looking at 4 sets of data, which we'll talk more about on Wednesday. But yeah, we're not looking at just one number, and we focus on 2, the core CPI and the CPI itself. Sometimes the consensus could be a mixed number. For example, this week, the headline inflation or the year-on-year CPI is expected to go up, but the core CPI consensus is expected to go down. So obviously that causes a little bit of a mixed situation in terms of how we read the market as well. This is something that, the reason why we do it, because I can explain to you in what context every inflation number or every NFP numbers, in what context they are discussed about every month. Okay. So news can be divided into 2 things. We basically have one that's unexpected, and just it could be terrorist attack. And just as a reminder, what happened today, more than a decade ago, we know there was a terrorist attack, 9/11, right? It causes a huge impact into the financial market as well. It causes a lot of fear in the market. Okay, so that could impact the news. Being unexpected, obviously it's not a scheduled event, so we don't know when that's going to happen. Military conflicts, like what's been happening in the past 2 years. Natural disasters, if there's a tsunami or earthquake. The last one that has a significant impact was the Japanese earthquake and tsunami. And at that moment, depending on what country it happens in, typically the currency does become stronger depending on what context it is. And when you talk about the equity market, investors typically get rid of stocks. And that's how it is. It causes that fear in the market. It causes a run to safe haven. But these are, what we call hot or unexpected news. Okay. But that's not the focus for our sessions. Our sessions are on the periodic news. These are numbers that come out regularly. For example, quarterly reports of the companies. If you're looking at the equity sites, right? Or it could be central bank meetings, monetary policy decisions. We have one this week, which is the ECB, and then we have the US ones next week. So from the FOMC. All right, and we typically trade the foreign exchange market. It reacts to them when they raise or lower interest rates, right? That have a huge impact as well. Quarterly GDP reports, we're going to have, we don't have the quarterly GDP numbers, but we have the monthly GDP numbers coming out from the UK this week. Inflation, obviously, we'll take a look at CPI, PPI, and the core inflation. All right, the core CPI. CPI is going to get released on Wednesday. The PPI this week, I believe, are going to get released on Thursday. Okay, we could be looking at business activity, manufacturing and services. These are the ISM services PMI, or maybe the flash manufacturing or services PMI from Europe, UK, and the US, right? Unemployment data. This is during the end of period release. Okay, we basically look at employment numbers. This week, we have employment numbers from the UK tomorrow, which is going to impact the sterling, right? Maybe you guys want to trade that news. And we have one on Wednesday, or is it on Thursday? But I'll check. But it's either Wednesday or Thursday. We have the Australian employment numbers as well. Okay, so if we take a look at the calendars later, there's a lot of news that you can trade, and we just want to filter out the high risk news. Okay, all right. So we do have several webinars to talk about this, but at price action at time of news releases can actually be condensed into the consolidation phase, the development phase, and then the termination phase. If you understand how the market structure works, we basically have an accumulation, participation, and distribution. This is very similar to that. We just have a market that's consolidating. That's a consolidation phase, and then when the market starts moving in one direction, it's the development phase, and then it kind of dies down a little bit. That's where the termination phase is. So you need to be able to detect these ranges before a breakout happens. So you want to have your order set before the development phase happen, before the market reacts to that news. And then you also need to be able to tell when the market is actually losing that momentum and need to get out from that position. Okay, but this is basically how the market will look like during news releases. Typically, sometimes it creates a little bit of a whipsaw, but in general, it still follows the same pattern. We have a consolidation phase, a breakout, and then basically just the development phase, and then the termination phase where we are losing that momentum, and you basically need to get out of your news trade. Okay. Ueda remark today become unexpected news. Not today. The remarks from Ueda was the Bank of Japan was over the weekend. It was actually on Saturday, so there was a news article quoting that the Bank of Japan is likely planning an exit from their easy monetary policy. So yeah, it is a little bit of an unexpected news in the market, and that's probably why if you take a look at the market today, the market kind of gaps down. Okay, I can show it to you later, but just to give you an illustration, the market does gap down today on the dollar Japanese yen, the euro yen, sterling yen, because the yen strengthened, and euro USD, pound USD, Aussie USD kind of gaps up a little bit. Okay, general rule for news trading, just a general rule. You basically need to study the market and the dynamics of a currency pair as well. Like, for example, if we are talking about the upcoming inflation trade that we're going to be doing on Wednesday, okay, what currency pair you want to trade? Which one has the immediate impact? Because it's the US CPI number, we want to look at currencies that is directly related to the US dollar. So we'll look at the Euro USD, Pound USD, Aussie USD, dollar Swiss, dollar Canadian, right? Anything with USD in it. We don't want to focus on the crosses. We don't want to look at Euro Pound. We don't want to look at Euro CAD, Pound CAD, Sterling Yen, Euro Yen, which has nothing to do with dollar directly because it doesn't have the immediate impact. Okay. Study the reaction of a currency pair leading up to that news release, right? And what's been forming in the market, which is something that we can talk about today as well. What to anticipate on that CPI as well. Okay. Then you need to prepare for trading. You basically need to mark the levels on the chart, which I'll show you today how we're actually going to be doing that. And then basically decide on your strategy. When are you going to open that trade? When are you going to close it? How long are you going to be holding it, right? Are you going to be trading it, minutes, hours, days, after you open the trade, when you want to actually close it? So you kind of need to plan ahead as well. Typically with news releases, I'm happy with closing my trade within the first 50 minutes wherever possible. But yeah, if it's not possible, sometimes I'll leave it be for about an hour or two. Typically though, like high impact news releases like the CPI number, the NFP numbers, we kind of get that immediate reaction in the market, and basically within 5 minutes we are out of that trade. You can take a look at the CPI trade last month, I believe, if I'm not wrong. I think it was the August CPI number where our trade only lasted less than a minute. It was 58 seconds exactly, because I review that recording again and I counted. It was about 58 seconds. It's basically just under a minute. We got in, we got out. I haven't had the time to even process the number. We were running in the right direction. It was profitable. We got out. The market reversed on itself. Okay, but yeah. Sometimes it's really quick. It's less than a minute, but typically within the first 50 minutes, we plan to get out. Choose a working time frame. I don't normally go into the 5-minute time frame. I normally stick with the 15 minutes time frame, and that's just how I look at things, right? But some traders do go into the 5-minute time frame and the 1-minute time frame. But for me, finding a proper range with less noise, I think it's about 15 minutes. But it really depends on what you're trading. Sometimes with gold, we need to look at the hourly range because it's much more volatile. Sometimes the 15-minute range doesn't actually mean a thing when it comes to trading gold. So it really depends on what you're trading and how volatile it is. Okay. Now determine the maximum risk for a trade as well. Think about using stop losses or maybe trading stop loss if you are planning to hold on to that position. But typically before we open the trade anyway, we'll create a range so we know what kind of risk we're dealing with. Sometimes it's not one-to-one risk to reward ratio because we kind of need to make that decision whether we should stay or get out of a trade. Sometimes we don't get one-to-one risk to reward ratio. Sometimes we get 1-to-2 risk to reward ratio. But at the very least, before we open the trade, we know what kind of risk we're dealing with and are we comfortable with that risk. Okay, and I'll show you how to actually measure the risk as well. All right, as I said, decide on the term of the deal. Will it be a quick trade? Is it going to be a long-term one, more than an hour? Make sure you understand what you're doing. You have something in your mind in terms of, oh yeah, if the trade happens, what am I going to do? All right, how long do I stay in that trade for? All right, so these are the pending orders. I'm actually going to stop here for a little bit because I do want to show you something. All right, so give me 1 second. All right, so I want to show you trading economics. Now, this is the website, or you can use Forex Factory if you want to, but I'm happy with the trading economics. You can actually filter it by impact and countries as well. So if you don't trade, let's say, the Euro data, I don't actually need to look at Spain number. I don't need India because I don't trade Indian rupees. Italy, I might actually skip Italy because I want to focus on the Euro area. France and Germany, that should be enough. G7, G20, I'll leave it there. Japan, United Kingdom, United States, I'm happy with that. So I can filter it, all right? And I can go by impact as well. if I go into the high impact releases, you'll see that on Monday we actually don't have any news because we don't have any high impact news on Monday. On Tuesday, we're starting to see the consumer confidence and the corporate confidence in Australia. Is it, it's considered high impact, but is it going to move the market? No, not really. The UK unemployment rate, yes, that's going to move the market. So even though they're high impact news for tomorrow, I might want to just focus on the UK unemployment rate. Economic sentiment from Germany, not really a concern to me, because I trade sterling a lot more, so I want to focus on the unemployment rate. And then on Wednesday, I've got the UK GDP numbers, and then these are the inflation number on Wednesday. Now, when I talk about news, in terms of anticipating that news, the two numbers that we want to focus on Wednesday is actually the inflation number. Take a look at the previous number. This is your number from last month. It's 3.2%. The expected gain this month is a bump up to 3.6% and 3.5% range. Okay, so we are anticipating the headline inflation to heat up again in the US. But if we compare it, the next key set of data is actually the core inflation number. The core inflation number is expected to go down from 4.7% to 4.3%. So we're not going to get two sets of data that's, both positive. Okay, we might have a positive gain in inflation number year on year, but if the core inflation goes down, that will become the focus for a lot of traders, because that's kind of what the FOMC uses as a benchmark for inflation in the US. So we need to know what the numbers are, and obviously with two expectations that's kind of against each other, we don't know what's going to impact the market. Is it going to be the headline inflation number? If it overshoots to 3.7%, yeah, I think that would be the main focus. Even though the core inflation might go down, but if the headline inflation goes up a little bit higher than consensus, then yeah, initial market reaction will follow whatever creates, a lot more disturbance in the market, right? Which one is unexpected? That's basically what moves the market. That's kind of the general rule per se. Okay. And then we can read up onto the next one on Thursday. We can plan ahead, if you take a look at the time, obviously this is my time. I'm currently positioned in Indonesia. Those are Indonesian times, but I kind of just leave it as that because it's also the US time, just AM and PM. Okay, but yeah, you can look at the dates. You can change it obviously depending on where you're located, but yeah, I can go into GMT and it's going to change it. If I live in London, that's going to change the time for me as well. So a lot of these calendars kind of have that option to change the time zone. But I think the most important part is actually the impact. All right. I typically filter, if you're just starting out news trading, I would filter out the low impact ones, because I don't need the low impact ones. There's going to be a lot of numbers that we don't actually need to focus on, right? So there's a lot more if I add up the low impact ones. You can see that basically just news every hour for you to trade, but not all of this news create that impact. It typically doesn't create a huge market reaction if it's low impact. You can go into the medium impact ones, okay? It might create a little bit of a movement in the market, but maybe not. Like for example, the Aussie unemployment rate, this is highlighted as a medium impact. Now, on Thursday, is this going to be a medium impact news? It's actually going to be a very high impact news coming out from Australia. The reason being, we have RBA last week deciding not to hike interest rates, and RBA typically focus a lot more on the Australian employment sector to help out in terms of whether or not they should be hiking interest rate. So if the unemployment rate significantly goes down, it gives them room to potentially hike. Okay, if the unemployment goes up, or that means it's bad for the economy, then the RBA would say, look, our employment sector is actually not doing that great. We might actually need to pause interest rate. So on Thursday is actually a high impact news. It's listed as a medium impact news, but it's actually a pretty high impact news. Okay, so sometimes when you filter it out, it might say that it's important, but in actuality, it's not. The unlisted one, like a medium impact for the unemployment rate by context, this week is actually going to be important. Okay, so that's news trading. That's the calendar that you need to take a look at. All right, let's talk about the order types. So basically, there are 4 order types. The buy stop orders that you place above the current market price and you expect price to continue to go up. So if you're trading a breakout, right, you want to place a buy stop above the resistance, just in case the resistance is taken out, the market's going to shoot up. Okay, sell stop is the opposite. You place the order below the support level and you expect market to continue to go down. If it breaks below that support level, you want to go in that direction. The stop orders are your friend, right? So stop orders, basically orders that you use during a breakout. Okay, if the market breaks support, you want to place a sell stop. If the market breaks resistance, you want to have a buy stop to create a long position. The limit orders, and it's called limit for a very particular reason, orders placed above the current market price, but these are orders that you place above the current market price when you anticipate the market to come down. Okay, so those are going to be your limit orders. You place a sell limit above the current market price if you anticipate the market to maybe do a little bit of a pullback and then get rejected by resistance and come back down. Okay, and then you use the buy limit if you expect price to bounce off support levels. Okay, right. So the buy stop and sell stop, we want to focus on the range itself. Remember the consolidation phase. That way we can identify the buy stop and the sell stop range. So what happens is price is kind of in the middle, and you want to create a buy stop above the current market price, a sell stop below the current market price. Now, when it comes to news trading, we actually don't know if it's going to be a buy order or a sell order, because typically market hits one direction and runs in that one direction. And that's the reason why we want to net the market. We want to throw a net. We want to create a buy stop. We want to create a sell stop. If it breaks in one direction, us as a human being, we just don't have that quick of a reaction to kind of, oh yeah, I want to trade this. It just breaks that range. So we use the stop orders to actually help us out, especially if we're trading more than one currencies. It does help out a lot. Okay. So for example, on this one here, the buy trade was triggered. The buy stop got triggered. We're now in a long position. We have a buy position. The sell stop needs to be cancelled because we only want to go in one direction. You can see in the previous month's video where during CPI, I believe, and NFP, we have experienced this in the past 4 months, where the buy stop and the sell stop got triggered, and it causes a lot of confusion because I got hedged and I have to make a decision which trade needs to be let go. Okay, but yeah, if one side is triggered, you want to cancel the other side. Just let it run. Okay. Once it started running, you then want to move your stop loss to break even, just in case, because during news releases, price does move really quickly. There's a lot of volatility. What goes up can come down really, really quickly. And if you're not sure, every single time there's an opportunity to move your stop loss to break even during news releases, do that. It's much better to not gain anything than, anticipating the market to go in one direction, anticipating a huge gain, but you have yourself a huge stop loss as well. We want to minimize our risks at any given moment. It's much better to have your stop loss at break even, just in case the market reverses on itself, because I can show you a few examples. You guys can watch the previous NFP and CPI videos. You can see it. It happens a lot, especially during NFP sessions. CPI typically goes in one direction, right? But you got to be really careful during news releases, and we want to secure our risks as soon as possible. And by that, moving your stop loss to break even is a good strategy. because there's a lot of volatility. We don't know what's going on, right? It moves so quickly. If we can secure our risks, we don't want to have any risk going forward, during high volatility. That would be the best option. Again, are you going to get stopped out? Yes, but you're still going to get stopped out at zero because you're at break even. It's a much better proposition than, let's say, getting stopped out at -10 and then the market reverses or whatever. It causes a lot more psychological trauma. Okay, so when going the buy stop and sell stop strategy during news releases, you really want to start moving your stop losses once you're profitable. Okay, so in this case here, the market shoot up about 30 pips. So yeah, you're already positive 30, starts pulling back to positive 20. That's when okay, you need to start moving your stop loss to break even, just in case, the market reverse on itself. Okay. All right, let's do a quick practice on the buy stop and the sell stop. Tonight is actually not a bad night to trade. Look, there are no news releases today, but there are several key range that we want to take a look at, and I do want to show you a few things as well, right? So Euro USD, you can tell this is the gap I was talking about. Market kind of closes down here, and it opens up there, and overall, there's still that gap here that hasn't been filled by the market. If we measure, that would be from there to there. This is the gap that hasn't been reached and it hasn't been filled. So for the Euro USD, we have seen the market kind of pull back up a little bit. All right. Are they at a very significant key level? Is there something that we can focus on? If you go into the hourly time frame, it's not key level per se, but it's a level where it failed on Friday. So we have that rejection on the Euro USD. Right now, it's kind of trending down a little bit. Now, if you go into the smaller time frame, I would go into the 15-minute time frame because I want to create 2 stop orders. Now, I know this is currently tracking lower, right? The RSI is a little bit flat at this point in time, but just in case, I can actually place a buy stop just up there, about 1.0735. Okay, so if price goes back up again, then I want to be in that long position. Or if price goes down a little bit lower, just down here, just below that low that we have right now in the 50 minutes, then I want to be on the short side. Okay, so I'm going to leave this here for a little bit. And I want to actually take a look at the yen crosses really quickly because we might actually be looking at a potential continuation from whatever happened today. Right, go into the 15-minute time frame on the dollar Japanese yen. You got a couple of orders here. You can actually have a buy stop order just above 147. I would have it about 147.10, and you can actually have a sell stop just a little bit lower, below 146. Okay. So market is kind of in between right now. I think by the end of the session, I think one of these trades should be triggered. Okay, and that's simple as that. We basically look at the range. Remember, we want to be looking at the market consolidating. So if we take a look at the range on the dollar Japanese yen, it's consolidating. You can see that range there, pretty clearly. I'm actually looking for more of a potential run to the upside on the dollar Japanese yen, but whatever it gives, right? Because right now, is this impacted by news? Yeah, to a certain degree. Whatever happened to the yen crosses today is highly impacted by the comments coming out from the Bank of Japan over the weekend. So this is still considered news trading. And I think we're looking at a consolidation phase throughout the whole day. We have the upper range, we have the lower range. We can actually create boundaries on the market itself. So for the dollar Japanese yen, the range is kind of there. It's pretty huge though. It's about 50 up, 50 down. But it's still nevertheless a range that you can actually use. The euro yen, also a very similar situation as well. I think this one has actually broken below the range, but yeah, it's similar situation here. We want to look at the upper range. All right, look at that and look at this. And we basically want to create a buy stop above that. We want to create a sell stop below it. Simple as that. So I'm placing a lot of orders right now. We've got the Euro USD, dollar yen, Euro yen, sterling yen as well. On the 15-minute time frame, you can actually create that orders as well. I can have a buy stop there, and I would have a sell stop a little bit lower here. Okay. All right, that's my range. You can see what's going on. We have a consolidation throughout the whole day. Next up is the pound USD. Very similar situation with the pound USD. Can we create a range for the pound USD? Yeah, we can. So it has been trending up, so there could be a higher potential that this one could break a little bit higher, right? And the lower side, we will actually use this range. And this is actually part of strategy in terms of trading the US breakouts as well. Okay, but we can zoom out and you can take a look at what's going on with the pound USD. It has been tracking a little bit higher throughout the whole day. And yeah, you know, market is kind of flat right now. That's when we actually want to use the buy stop and the sell stop orders. Okay, so that's, you know, that's trade on Euro USD, pound USD, dollar yen, Euro yen, sterling yen. Can you do that on gold? I think a lot of people are going to be asking this. I would say yes. If you take a look at where the resistance is for gold, generalized, it's actually just about 1930, right? So that's going to be your resistance for gold. And you basically want to have a buy stop slightly higher than that. In fact, we even have a target level, which is about 1935, 1937. But yeah, the lower end is actually this one here. If you go into the 15-minute time frame, you'll actually be able to see it, right? So we just created a little bit of a range. I want it to be a little bit lower, maybe about 1920. That's where we actually want to short it. But yeah, can you set your stop losses with these orders? Yeah, you can. So right now for gold, for example, I'm actually looking at a potential. If it breaks to the upside, I could actually target 1937. All right, so I can modify that as my potential take profit level. And if it goes down, can I target something to the downside? Yeah, I could be targeting about 1915. So can I modify it before the trade get executed? Yes, I can. I can have all that, you know, so much so that if I'm looking at this trade being triggered, for example, to the downside, I can actually have my stop loss at the other end, about 1931. So I can have that. And it's actually going to be there. The other one as well, I can modify it. My stop loss is going to be about, I'll say 1922. Right? So before you even trade it, I know there's a lot of lines because we have our potential orders, right? And that order is accompanied by a stop loss and a take profit level as well. And it has 2 orders, so you're looking at 6 lines. But yeah, just go into the order list. You can actually set your stop loss. You can set your take profit level as well. Now, I think market is a little bit flat. We're not triggering any trades right now. So yeah. That's how we actually set our orders. It's pretty simple. It's pretty clear. We look at a range. We look at consolidation. You know, I don't want to just do it on the 1-minute time frame. Just give you an example. Oh yeah, the order is going to get triggered. But no, I'm actually currently looking at the market properly and telling you, all right, there are ranges today where there could be a potential breakout, even though there are no news today. So you can still use the buy stop and sell stop strategy when there are no news releases. It'll be better during news releases, but you can use it without it. Hey Chucks, how are you, man? Waiting for an hour candle to close after the news is released? Yeah, that's fine. But you know, that is, you know, kind of the old school technical analysis. But again, as I said, some people wait for the news to get released and they'll trade after the news. Sometimes, you know, some people actually want to trade during news releases. Back again, it's your preference on that. How do we determine what to set out our entry for the buy stop and the sell stop orders? Okay, let me just pull something out, maybe the dollar Swiss, right? So let's take a look at the dollar Swiss here. This is currently on the hourly time frame, which is perfect. And just want to give you guys an illustration. So I can zoom out a little bit and you'll notice what happens here, right? You can see that the market has been moving up and then it creates a range. So every time you see a little bit of a rectangle, that's your ticket, because you know where to actually place your buy stop and your sell stop, because it creates a range. It consolidates before the breakout. Look, this is on the early time frame, so you can actually use this as a technical strategy. All right, I'm just using this as an example. If this is what you see before news, the simplest way to place your sell stop is anything below where it ranges to the downside. So I'll just create a sell stop below the range, right? And a buy stop, it's slightly above the range there. So somewhere there, okay? That's how you do it. As simple as looking at whether or not the market goes sideways. If the market goes sideways, perfect. If the market doesn't go sideways, it becomes hard for us to actually place our buy stop and sell stop. But the perfect scenario is when we actually see the market flat like this. So the dollar Swiss, feel free to consider it as pre-news, but this is on the early time frame. We are technically looking at the current range on the dollar Swiss for a potential breakout. Not sure if dollar Canadian, the dollar Canadian here, this is going to be tough, right? Because if we take a look at the dollar Canadian, we can only establish one resistance. In terms of support, we are actually looking at this low over there. But the market doesn't move in a range because it technically trends up and then reverses really quickly. So it's actually not in a consolidation phase. So a situation like this means we cannot use the buy stop and the sell stop strategy. It's as simple as that, okay? So we can identify the resistance, but we can't identify the support. But if we go into a small time frame, can we minimize it? Still, we're looking at a potential resistance, but no support. Okay, no support at all. We just actually broke support. So, if we were looking at this trade about an hour ago, we would be in a short position. But yeah, at this point in time, we can't actually place a buy stop and a sell stop and trade it as if it's a range on the dollar Canadian. All right. So the buy limit and sell limit strategy, this is actually something that happened today on the dollar Japanese yen, where it actually bounces off 146. It was earlier in today's session, but that's where we anticipate a little bit of a bounce to happen. Okay, so for example, if you look at the current condition and we expect that upper range to be a resistance and we want to short it there, we can wait until the market goes up, okay, and then trigger that trade. This is ideal if you need to step out of in front of your computer, or you are unable to trade, or you are unable to monitor your trade. You can anticipate where the resistance is likely going to be. You need to be able to do your technicals properly. Even during news releases, this is a strategy that is limited in use, I'll be honest with you. Because it carries a lot of risk unless you know your price action really, really well. Okay? But in this example, we're anticipating a little bit of a resistance building up. We want to sell if market does pull back to the upside. And that's it. It touches it and then it collapses to the downside. That's how we look at how we use the limits. Okay? But this is a very, very, very limited case scenario to be able to use this. Okay, now I'm actually going to show you something else, because this has actually happened. This is actually a trade that I took today and I already got out of that trade. But let's recap a little bit, and I can show you that via bar replay here. Okay, so I'm going to show you what happened today, right? This is what we saw in the morning. We have a huge drop to the downside. We have a couple of support building up, but we don't have anything significant until about 146. Okay? So we want to highlight 146 because that's a key psychological level, and that's basically the support area right around here. And that's basically the focus. So what we're going to look at is that we actually want to create a buy order right around this level. If it triggers, we want to trigger a buy and maybe do a little bit of a pullback higher. to about 146.80-ish level. All right, just to give you an example, or maybe you want to target 147. But just to give you an example, maybe about 146.80, because that's where the lows are contained over here. Okay. Now, if I were to show you what happened, right? You see what happens here? The market touches that, and you are in that long position, and that's it. Your orders get filled, but this is how we use the limit order. In this case, we want to be using the buy limit order, but yeah, it takes a lot more skills, right? It's not like, oh yeah, a range breakout is as simple as that. No, when it comes to limit orders, it's a little bit more of an advanced type of orders, and ideally, if you are new to all these order types, you don't really want to, do a lot of limit orders, because it takes technical knowledge and understanding of what is going on in the market to actually be able to place that limit orders correctly. If you do it incorrectly, you could be going against the trend. So think about it, there are risks actually involved with this. Okay. All right. So yeah, I've got that order close to 147, and then it reverses to the downside. Now, obviously, that's if you want to counter it. If you don't want to counter it, you might actually be looking at, oh yeah, you know what? I'm actually going to be waiting for a sell limit. So let's say it goes all the way down here. All right, I missed out on my entry. And I would say, yeah, you know what? I think the market is going to go up. I'm going to have my sell limit at 145.75, maybe my stop loss there, and I'm aiming for a return lower for the market. We could be looking at that, right? So this is a sell limit. So we want to create a sell limit order. Okay, so let's replay. The market goes down. No worries. Your order hasn't been filled. Nope. There we go. Your order has been filled now. And if you anticipate this correctly, the market would just reverse, and you are in profit right now. I think you are in about 35 pips. Obviously, you can make that decision whether or not you should be moving your stop loss to break even. But just in case, I want to move it at break even, or maybe minimize my stop loss to just about 20 pips. Right? Happy with that? And that's how we use the limit orders. Simple as that. Good. Cool. Now, just a reminder again, with the limit orders, it does take a little bit of skills, a little bit of a deeper understanding, especially into the mechanics of the market, the technicals of it, what are the key levels, where are the support area, where are the resistance area, where do you think people are going to be buying the market or selling in the market, right? So you need to decide on that. Okay. So, yeah. There are a few examples on how you actually want to use the limit orders. If the market pullback, you probably want to go in for a limit order. You can do that as well. But I'll be honest with you, this is going to be a very, very limited use case scenario. Okay. Right. Let's do a quick test before we end our session for tonight, and before we go on to the Q&A session. Just a quick test. If you guys can answer me, all news can be divided into two categories. What are they? Okay. What are the type of news that people are looking out for? And then what type of orders is most often used in news trading, which is something that I delve so deep into it and even give you hints just now. And the third one, can you use ordinary indicators to trade the news? Okay, so if I can have the answer, just to know that you guys are paying attention. News can be divided into two categories. What are they? And what type of orders is most often used in news trading, and can you use ordinary indicators to actually trade the news? Okay, so yeah, just waiting for the answer. While we're waiting for this, if you have any questions, feel free to ask it as well. if you have any questions regarding the stop orders, whatnot, I think I only got one question in terms of where we should be placing the entry for the buy stop and sell stop orders. But yeah, look, it's a very simple concept. I shouldn't expect a lot of questions. It is a very simple concept. It's just that we don't have the time to explain it during the NFP webinars or the CPI webinars, because we are kind of a little bit tight in terms of time. All right. Number 2, limit and stop. Yes. Number 3, yes, you can use ordinary indicators to trade the news. Limit and stop are the most often used in news trading. The stop orders are the one that's actually most often used in news trading. No one's giving me the answer to number 1, but all news can be divided into 2 categories. One is the scheduled news, all right, the periodic news, and the other one is the unexpected news. So yeah, that's basically how the 2 category of news. We need to understand what they are. So we got one that's periodic, that's scheduled. We have a consensus. We know what to look out for. When is it going to happen? We got that scheduled. The other one is that it could be unexpected, like what happened with 9/11. It was a shock. It was unexpected. I think everyone old enough to remember that day is probably still going to remember what they were doing when they saw the thing happen, right? For me, it was about 1 a.m., 2 a.m. in Sydney, Australia. It was during it was a very hot day, going into a fall, right? It was a very hot day, and everyone still remembers it. But was that expected? No, it was an unexpected news. But yeah, things like that, it happens. And today it's the anniversary of that event. Those that probably don't remember, I'm probably too young. Buy sell stop orders and buy sell limit orders. Yes, those are the order type most often used in news trading. All right, cool. This is the code that you can use. It's non-farm 2023. Again, you can use this to double your deposit bonus. So if you're doing this during when you want to deposit, just use the code. I don't think there's any harm in using the code. It gains you a double deposit bonus. Obviously, there's actually still terms and conditions in terms of what you can use with the bonus, but yeah, it's still there. As I said with dollar Canadian, I don't think there's actually anything on the dollar Canadian, because in terms of direction, I think we're still looking a little bit of a drop lower for the dollar Canadian, but huge but. If we go with what we can measure from the hourly time frame, let me just change that. There we go. We are past 161.8% on the hourly time frame, so this is currently beyond projections for the dollar Canadian, and it's actually going to be hard to trade the dollar Canadian right now because it doesn't consolidate, so it doesn't give us that opportunity to jump in for a trade. Okay. All right. Let's go back. Any questions for tonight that's related to what we're looking at or what we're learning for tonight? No? All good? Might be a little bit of a delay on my side, but I think there are no questions. Okay. All right, so what's next? On Wednesday, we are going to be trading the inflation number, the US inflation number or the US CPI numbers. This is the inflation number before the interest rate decision next week, right? So we don't know if there's going to be a hike by the FOMC in September or is it going to be in November. So obviously this is a very important CPI number, and I think the market is kind of consolidating until the lead up to the CPI numbers. So you can actually see the market doing a little bit of a consolidation in the market, potentially doing a little bit of a correction as well, a little bit of a pullback, right? Because the anticipation that's really high for the US CPI numbers that's going to get released on Wednesday. And it's great that we actually have a live trading session on the inflation numbers. That's going to be the same time as today, just on Wednesday. No, we'll talk more about, I'll explain a little bit about what the inflation rate is, what's the CPI, what's the PPI, what is the core inflation, and obviously the live trade that we are going to be doing on Wednesday as well. Okay, cool. All right, so that's pretty much it for today. Thank you for attending. Don't forget to set your alarm for Wednesday, because whether or not you want to trade the CPI, it's still going to be a great experience. It's going to still be a learning experience, especially if you guys are new here and you really want to know what actually goes on during the CPI release. All right, so yeah, this is going to be great. Okay. All right, guys. Can you share a link or video tutorial about how to use the MT5 platform? I think there are several tutorials on the OctaFX channel, but MT4 and MT5 is pretty much a very, very similar platform. But yeah, very similar. It's just a more of a touched up modernized version of MT4, but how you actually use it is basically the same thing. And there are webinars that has been done by OctaFX. If you maybe look up on an introduction to Forex, typically they do explain that during the introduction webinars. Okay, thank you all. Have a great day ahead. Good luck with your trades, and I'll see you on Wednesday. Stay safe.